No doubt.
Because most market crashes involve excessive borrowing, and that gets channeled into...
What actually is riba? Because the riba is not clear-cut where you can say clear-cut equals an incremental increase in the capital. I'm looking at what the religious texts are trying to achieve. I can see why religious texts have always spoken about the usurious nature of lending, not necessarily the incremental nature of lending. I like the fact that you are a person of faith as well. I think Christian ethics has so much goodness within it, particularly in the investment principle space, and not much is actually spoken about in relation to Christian ethics. There's a number of different verses in the Bible that talk about Christian ethics and about wealth and using wealth wisely, generously, and so forth. And we see that in a lot of different texts as well. A lot of different faith-based texts too, whether it's Christianity, Islam, even when it comes to Vedic texts, Hinduism, which is incredibly noble. Whereas I think the contrast here, particularly when it comes to Christian-based investing, correct me if I'm wrong, Chris. Okay, you don't have this, or you don't have the same level of negative screening as specified via religious texts as Islamic texts, or I wouldn't say Islamic text provide. It's because it's more juristic in terms of what the filtration criteria is when it comes to Islamic investing.
It seems to me anyway that there's a great deal more scholarly attention to the rules of business in Islamic investment, structuring of contracts, and you can elaborate more on this in terms of why the rules are the way they are. The concept of riba as opposed to usury. Yeah. So the Christian faith, riba is not a problem. Yeah. Usury is a problem. Yeah. And the structures around the Church of England and the Catholic faith in terms of it's more about guidance and trying to avoid harm and relating those harms to almost the Ten Commandments and interpretations around those. So, and there is overlap. There's a lot of overlap. The differences, but there's a lot of overlap. Yeah, but when it comes to riba, so riba as you've understood it, correct me if I'm wrong, I think you mean any incremental increase over the capital, right? More interest, huh? Interest. Okay. Yeah. So an interest would be tends to be defined as any incremental increase over a capital that is lent. Right. Yeah. Whereas usury, as I've understood, or as I'm assuming how you're taking it, is excessive amount of interest on the capital, right? Yes. Okay. On that, there remains scholarly dispute. Okay. Even within Islamic scholarship. Okay. For many, yes, there remains a difference of opinion in this regard. Having said that, though, generally there is consensus over an incremental increase in the capital is interchangeably used as being usurious in nature. Having said that, though, the Quran doesn't define it. It doesn't define the incremental increase. What the Quran actually talks about is usurious lending. So you have a concept of Quranic riba, and then within other sacred text, which is the hadith, and it's via the hadith and then juristic opinion, the consensus is among the scholars that even an incremental increase on the capital, that is considered usurious in nature. Oh, wow. Having said that, that element of it all, right, it's not entirely clear-cut, That's an area that I've pondered about a lot because I consider, in some ways, I'm actually even more stricter
Okay, and I'll explain why in certain instances, particularly when it comes to investing. Okay, and what actually is riba. Okay, because the riba is not clear cut where you can say clear cut equals an incremental increase in the capital. Because I'm looking at what the religious texts are trying to achieve.
Yeah.
Okay, whether it's Islamic religious texts, whether it's Christian religious texts, whether it's Vedic Hindu religious texts, Jewish religious texts, every single faith out there. Why have they had a problem with interest or usurious lending? Okay, what is it about it? Okay, so I've spent hours thinking about this. Okay, and I've thought about and I've concluded. Well, dare I say concluded. What I would say is, if you're creating money out of thin air that can no longer be serviced or cannot be serviced via the repayment of the original debt and the debt plus that amount, okay, you are creating an unstable economic environment, okay? And if you're creating an unstable economic environment, then that's going to have a serious impact on wealth inequality, on poverty, okay? It's going to have a serious impact on power structures, exploitation, all of that sort of stuff, okay? So hence why, right, there is something to be said about the usurious nature of lending, right? Having said that, having said that, what if you have given a loan, okay, and yes, you've charged an extra amount on top of the capital, let's call it interest for now, but that loan has been put to good use where the economic productivity overtakes the interest that is charged, okay? In that economic environment, and consider it from a macroeconomic point of view, I can only see that being positive right now in my system of thinking.
Yeah.
Okay. Now, when I couple that, okay, with what the Quran has said and what other religious texts have said, I'm thinking, okay, fine. Okay, in that regard, okay, I can see why religious texts have always spoken about the usurious nature of lending, not necessarily the incremental nature of lending. And I can't stress to some of my viewers, right, I am not giving a legal opinion here on Islamic law. Okay, we are just having an open-minded conversation. All right, and I really want the audience to learn about these particular arguments as well, because I'm a student myself. Okay, having said that, so I mean not to offend anybody. Subject to that, though, Chris. Okay, I think the negative screening within Islamic investing is very interesting. Okay, but you asked what the scriptural basis of it was, or what the rationale behind it is. So you've got, let's say you've got the first one, 5%. So if you're choosing a particular underlying stock, and if 5% of the profits come from a revenue stream such as pork, alcohol, gambling, or whatever, if it's up to 5%, then it's still okay, all right, but that 5% is still essentially contaminated as such, okay? But it doesn't mean you remove that stock from the underlying portfolio, because they look at that 5% as being ultimately incidental, okay? So that's where the 5% comes from. But why is it not 2%? Why is it not 10%?
Yes.
Why is it not 11%? All right, heaven knows.
Yeah.
Okay, so there is a concept in Islamic jurisprudence, okay, called ijtihad. Okay, so ijtihad is when you have scholars exercise their faculties in light of the social context, and then they derive a certain particular opinion. It's not necessarily based on scripture, but rather the spirit of the law. Okay, so that's the basis of the 5%. But when it comes to the other ones, especially when you're looking at debt to market cap, okay,
Yeah.
And you've got popular numbers like 30%, 33%, 37%, sometimes even going up as high as 49%.
Oh, really?
Okay.
Wow.
Yeah. Okay. That stems from what is considered as excessive.
Right.
Okay. Now, so the scholars, what they have done is they've taken a historical context from a particular companion of the Prophet, peace and blessings be upon him, in relation to, so he came to the Prophet and asked him, okay, he was quite unwell and he wanted to give all of his wealth to charity, okay? And then he said, shall I give all my wealth? And the Prophet said, no. Shall I give half my wealth then? The Prophet said, no. Shall I give a third of my wealth then? And the Prophet said, okay, but even a third is too much. What you should rather do is leave your heirs wealthy. Okay?
Okay.
So there is that's the 1/3. That's the origin of that 1/3. So it's deemed to be 1/3 is the benchmark of excessiveness. Okay. And then these scholars extrapolated that particular 1/3 and applied it to Islamic investing. And this was largely done, I believe, in the 1990s by Sheikh Nizam Yaqubi, I think it was. So you have to understand they were working in a milieu, right, where investing was becoming more popular to Islamic investors across the GCC and elsewhere. So there wasn't an equivalent listed stock exchange in the Islamic world. Okay?
Right.
So and they had an abundance of wealth. Where are we going to put all of this money?
Okay.
Okay, where are we going to get this growth from? So they had to come together and do something.
Yeah.
But having said that, okay, if you've got a certain industry, actually, before I go down that particular path, okay. So let me explain. So we got a 33% debt to market cap. Okay, so what we're effectively saying, all right, and this is to the audience here. Okay, so let's say you've got a business valued at 100 million. All right, that business can literally take a loan of 30 million. Okay, in the conventional market, so an interest-bearing debt in the conventional market. Okay, so that's where the 30 million comes from, and they use that 30 million, subject to interest, to fund their operations, development, and so forth. That is considered Sharia-compliant. Okay, so here's where the controversy is. Okay, and I raised it quite recently to a very close friend of mine who's a scholar of repute. I will not share his name. Okay. So I said to him, it's something I've thought about anyway. I said, look, what about SMEs? Okay. Because Sheikh Nizam Yaqubi, he was writing in relation to listed stock, and his thesis was in respect of the Dow Jones Islamic Index at that particular time. Okay. But what about SMEs? All right. What about my business? If my business is valued at 6-7 million, okay, and you can't use market cap on SME in the same way, all right? But let's go based on goodwill plus balance sheet, all right? Could I take a conventional loan out at 30%, 33% or so forth, okay? And so my rationale is, yeah, of course you can, right? If you're applying the same rationale for listed companies, why can't you do it for SMEs? Right? I'm not expecting you to give an opinion here, Chris.
No, I know something about corporate valuation. So the SMEs, so small, medium-sized enterprises, I mean, they can be listed companies, so there will be a valuation. But once you get to a private company,
I meant private companies, correct.
Then you've got a huge valuation problem.
Correct.
Because there is no market valuation. You'd use other metrics to try and come to something. And you'd be able to pull a calculation together.
Yeah.
based on something.
Yeah, but it's the principle of that 30%, right?
Yeah.
Because now you go to a private company and they're struggling to raise finance, right? And they are avoiding getting interest-bearing debt. Now, here's the irony. This is going to be hilarious, so audience, listen up carefully. So you go to a Sharia-compliant fund house, right? Now, that Sharia-compliant fund house is Sharia-compliant, subject to all of those criteria that we were talking about earlier, right?
Yeah.
So now what you don't realize is they've raised 30% of their market cap on the conventional money markets. So they've raised the conventional money market and lent it out to you on a Sharia-compliant contract. So these are the type of hilarious things that I'm actually having conversations with
which is almost a conventional banking industry. But I suppose the way around it really is more in the way of the finance lease or operating leases and things like that sort of traditionally constructed around, or asset-based purchases. But just to flip back to a question that you put to me earlier before we got here, about the effects on performance and risk of, let's say, the leverage ruling.
Yes.
And so I've had time to look into that. And certainly in major market downturns, it is evidence that substantially reduces the risk attached to a Sharia-compliant portfolio.
Yeah, no doubt.
Because most market crashes involve excessive borrowing.
Correct.
And that gets channeled into the risk, and the downturn of that gets channeled into the banks and the big lenders and the heavily indebted companies. And so the Sharia rules around indebtedness act as a significant buffer.
Brilliant.
And that's evidenced in every market crash over the last 25 years.
Yeah, correct.
So it's an interesting sort of realization of the thinking behind, or part of the thinking behind the ruling.
Yeah.
That excessive lending round in circles and circles and circles is probably going to end badly.
Yeah.
And that is evidenced in real life.
Yeah, correct.
And then the focus also on productive assets, as opposed to trading profits or anything like that.
Yeah.
Again, in a market downturn, those are the assets that are robust.
Yeah.
And you probably get a slightly quicker recovery in the value of your shares.
Yeah. Fantastic.
Because you're in solid income producing assets. Yeah. So some of that thinking is sort of evidenced in real life.
No, I agree.
In good outcomes.
I think the filtration criteria is fantastic. I mean, when it comes to negative screening, I think there's something to be said about having good social values. I mean, if we are going to be extremely liberal with our economy and allow absolutely everything for the sake of profit, if we've got a gambling house at the end of every street corner, or we're doing something else that is quite nefarious, we seriously need to think about what impact it's going to have on our children, right? Yeah. And our children are ultimately the greatest economic productivity tool for the global economy. Okay?
Yeah.
I think that's nationalism for you, right? We need to invest more into the well-being of our children. No doubt. Okay. I guess some other questions I'd love to ask you, okay, would be what type of stock and fixed interest securities are Sharia compliant investors missing out on?
It's to some extent situational.
Yep.
So if we look to the broad question that we touched on a bit earlier about portfolio construction.
Yep.
And in the Islamic investment, we don't have access to the bond markets.
Yep.
And bond markets are very, very well developed. They're huge. And because they are developed, there are lots of different ways of controlling how they behave.
Yep.
You can do it in a very micro way.
Yeah.
And the sukuk market is not so well developed,
Yeah.
and it's not as broad and it's not as liquid.
Yeah.
So we don't have quite so many tools to hand.
Yeah. Okay.
And with that, I'm talking, forgive me if we get a bit technical, but I'm talking about duration.
Yep.
And credit quality.
Yeah.
And high yield, low yield, those sort of things.
Okay. But you said earlier that on the Sharia-compliant side, they're more resilient in economic downturns, especially in the last 25 years, right?
But yeah, because by and large, the crises occur because of excessive poor quality lending at the top of a boom.
Yeah. Okay.
So there's lots of other stuff around that's fine, government stock and so on. And the sukuk market has government issued bonds, government issued sukuk, which will be highly rated, very secure. Yeah. But you don't have the same level of flexibility within there. Okay. So so what is it you're missing? You're missing on the Sharia investment is missing on some of the flexibilities around that the bond market has because it's bigger and more developed than the sukuk market, which is growing.
Yeah. How does that translate into performance and volatility?
You might find that a traditional, so middle of the road portfolio on the Sharia versus conventional, the flexibilities within the conventional array will leave the sukuk possibly looking more volatile. Okay. The sukuk will probably be more volatile than some of the tools available to us in the conventional
fixed interest space. Yeah.
Fixed interest space.
Okay.
The second thing that makes a difference is the use of derivatives. Yeah. Because derivatives are a key risk management tool in institutional investing. Yeah. And that option isn't available in the world of sukuk. Yeah. So there are two volatility controlling tools that aren't available in the Islamic world. Okay. But they're not deal breakers, these things. Yeah. If you're a longer term investor and the sukuk is constructed properly and it's based on assets, you still got a robust product. Yeah. But at certain times it will behave differently.
Yeah, totally. How would you determine the most appropriate sukuk to invest in?
I'm going to start. We're going to get out of our depth quite quickly. This one, so the first thing are the technical things like duration, credit risk, interest rate risk, geographic risk, those sort of things. They're the same metrics you would apply to a bond portfolio, and you can apply those metrics to sukuk. Yeah. Okay. Because the nature of the contracts underpinning the sukuk fund will have those characteristics. Okay, fantastic. There's just that they won't be bits of debt. Yeah. They might be operating leases or real estate fundings or whatever. Yeah. So you can do that analysis. Then we start to stretch my knowledge a little bit here in terms of the nature of the contracts that underpin the sukuk. Yeah. Whether it is things like mudaraba, murabaha, those sort of things. Yeah. And
you're actually spot on, Chris.
Yeah, and so when I look at the specification of a sukuk fund, it doesn't give me that detail. Yeah. So, and it's probably a level of understanding that one ought to have when doing this right. And the other factor that I didn't mention then is actually the size of the fund, sukuk fund, because scale matters for liquidity and diversification underneath it. Yeah. But the nature of the contracts that underpin it all, I think requires probably quite a lot of understanding and hard work to get at. Yeah. And that will impact on how the sukuk behaves in different market conditions, I imagine.
Great. But could you actually, is there enough data on that right now, looking at individual sukuk in different market conditions?
You would.
I mean, what's the longest
longest
sukuk
extent sukuk fund? I don't know. I mean, there must be something with at least 10, 15, 20 years.
Yeah.
But it's the granularity of the data that comes through from the people that are putting the product together.
Yeah.
You would probably one would have to get a list of the individual holdings.
Yeah.
And then go to the prospectus, perhaps, for each of those holdings to determine what it actually is.
Yeah.
That would be a staggering piece of work.
Exactly.
So we've got to take a certain amount on trust.
Yeah, I think the lesson is don't try to do it yourself.
Yeah, I think that would be a monumental achievement.
Exactly.
Trying to do all that yourself. I mean, by the time you've worked it all out, it'd be too late.
Yeah, no doubt. Within our portfolios, Chris, how many different sukuks do we have, especially on the balance side? Do you recall?
I don't recall. Probably only a couple.
Okay.
And they tend to be the larger and more diversified.
Yeah.
Mostly for simplicity.
Yeah.
And due diligence purposes. So I go back to what we were saying a moment ago, is that when we're investing in a fund, we do a lot of due diligence. We want access to the fund managers. We look at their history, the nature of the organisation, all those sorts of things. And performing that level of analysis on a very small fund in a faraway place is very difficult.
Yeah, totally.
And as an observation about the industry as a whole, that the larger funds with the bigger managers tend to have better risk management controls, better operational controls, better legal controls, all of these, better oversight, and probably to some extent attract more talented managers. So scale counts for something.
Yeah. Totally.
And it's sad that it makes it harder for the smaller player to get to the big game. But and from the point of view of protecting our clients' assets, there are all these other risks that we have to cover off on that go on in the background, and you only find out about it when it goes wrong. We don't have a lot of different sukuk funds. It would be good to have more variety. Yeah. And in particular, in the way that they are constructed, so that they stand out differently to each other.
Yeah, no doubt.
As opposed to being able to say, all right, we just need some sukuk, any old sukuk will do.
So ultimately, what I'm getting at is we do an incredible amount of due diligence in the global investment space to come down to the number and type of sukuk that we have in our clients' portfolios. Yeah. It's not an easy job.
No, there's a lot to plough through. Yeah. The different factors at play is sukuk versus equities. As equities, you tend to look at how much money can I make without it going too wild. Yeah. And then in the sukuk and the bond world or whatever, don't lose money.
Yeah, correct.
We'll make a little bit of profit, but don't lose money.
Correct.
And so there are different thought processes going on.
Exactly. So on that note, Chris, I've thoroughly enjoyed our conversation today.
Thank you. So much.
Looking forward to continuing this conversation as well. Till next time.
Okay, super.
It's really a pleasure.
Thank you, Mas.